Welcome to Tech Talk Tuesday. I'm your host, Carla, and with me today is my fellow co-host and CMT, David Blake. It's Monday, March 4th, 2024, and we have some activity to talk about that happened in the stock market last week, along with some interesting things to look forward to next week. We do it mostly from a technical perspective. David, I hope that you had a great weekend. How are you doing today?
I'm doing okay.
Except for the golf thing, you're right. David had a rough golf day yesterday. All right, well, let's get started by taking a look at the market letter from last week.
Okay, well, actually, it's a pretty good week last week. Started out a little bit slow. Investors were kind of looking forward to the core PCE going to be released on Thursday. That's the Fed's preferred gauge on inflation. And luckily, it came in as expected. There was hesitation in the market early because we'd had that uptick in January in the PPI and CPI, and investors were just a little, they were a little leery that perhaps we might see a little tick in the core PCE also, which could push rate cuts out even further than what we're looking at right now. So we kind of traded a little bit mixed and sideways for the first couple of days, and then when the core PCE came in, it's still up 0.3% and 2.8% year over year. So when people tell you that inflation is going down, it's just going up less. It's not going down. But anyway, the market rallied off those figures. The Philadelphia Semiconductor Index surged 2.7% on that one day. And that was led actually by an almost 10% spike in advanced micro devices, which also had a lot of Broadcom was way up, and NVIDIA keeps rallying on that. All the semiconductors moving like crazy. And they enabled the NASDAQ to finally join the rest of the indexes, talking about the Dow and the S&P 500, the NYSE, the NASDAQ 100, and the Philly Semiconductor, all at a new record high. That was the last time the NASDAQ had hit a new high was back in November of 2021. So it's been over 2 years since that index made a new high. So that was kind of a little bit of a relief. Part of that also, it's not just the semiconductors, but we are seeing these markets, push higher on earnings this quarter also. I mentioned, and according to FactSet research, 97% of the S&P 500 companies reporting results. 73% of those reporting have reported a positive earnings per share surprise, and 64% are surprised to the upside on revenues. So things are coming in good that are supporting prices at this stage.
Would you consider the current rally a broad-based rally?
Fairly broad-based. Of course, the technology XLK sector was the biggest gainer, and that was followed by REITs and consumer discretionary. Those sectors were all up more than 2% on the week.
Which sectors were the laggards?
And then on the downside, we had healthcare, consumer staples, utilities, and financial all finished lower. Now, healthcare has been suffering a little bit because of the overweightedness of United Health Group, which is in the Dow. They ran into some trouble last week because they had a report that the Justice Department was launching an antitrust investigation on that company. So they had a big hit last week. Amgen also had a big hit on their weight loss drug. So that really kind of, those two were the big draw down on the healthcare. And then with the financial sector, we had another big drop at the end of the week on that New York Community Bank. And there's still concerns about whether the regional banks are going to, have some commercial real estate problems coming up. And it's still kind of, I think it's still kind of a coin toss as to how they'll go through that. We did see yields tick lower during the period. Initially, they were kind of edging up to start the week, but then once the data came in with the PCE, we saw them come down. 10-year Treasury ended the week at 4.185, and that's down from, I believe we got up to about 4.34 one day the week before, or something like that. So it's coming down quite, pretty fast. The 2-year T-bill landed at 4.54. I think we were pushing close to 4.75 on that. There were a lot of people afraid that we might hit 5% 2-year, but luckily we've kind of settled down on that for a little bit. So anyway, we ended the week, everything was pretty much higher except for the Dow Jones. The Dow Jones lost 44 points, but everything was good. We're now up, I think it's 16 out of the last 18 weeks. And I mentioned that MarketWatch put that in there.
So the S&P 500 was higher 16 of the last 18 weeks. That seems like a very long rally. When was the last time we saw a rally like this for the S&P 500?
But that's the longest streak for the S&P 500 since 1971, and it also ties the longest rally the index has had going back when it was created. That was back in 1923. So this is a historic run that we're seeing in the market.
So is the technical condition of the market still positive then?
Of course, the technical condition of the market is positive.
Are we overbought on the S&P oscillator by MarketEdge?
Surprisingly, we're not on the oscillator, the SRO. We're not overbought on that, which is good. Part of that was, because we have these weeks where the advances are kind of thinly based, and then of course the Dow was down last week, so the SRO looks at the broader market, and it's again we finished mixed last week, so that's where that was.
Are any of the indexes considered overbought right now?
We were led again, like I said, by the semiconductors. The Philadelphia Semiconductor Index is overbought, and some of these are overbought on their weekly charts. In fact, the semi index it's 77 on the 14-week RSI on Friday. That's something to watch because this thing is, with some big stocks in it, it has gained. Let's see, 2 weeks ago it was up. On Thursday, it was up 2.7% after the core PCE. Then we rallied on Friday. We had NVIDIA and AMD both up about 5%, and the SOX was up 4.29%. And today we're up another 1.3%. You have NVIDIA up another $13 or $14. AMD is, let's see here, he's up another 2.6%. NVIDIA is up 3.7%. And then you have the SOX up. Say today we're up about 1 point, well, almost 1.5% again on the SOX. That's an amazing run for the size of the stocks that are in there. Almost 10% in 4 days.
Where's the momentum index at right now?
As far as the momentum goes, the momentum index is a positive +6, which means most of the indexes are outperforming the Dow Jones, which is bullish. Underlying breadth seems to be mostly positive. We did have pretty good advance in the AD lines, especially on the NYSE and Nasdaq, and that's what you want to see. That they're considered a leading indicator of market direction. And then you also had new 52-week highs to the new lows last week, and in fact, on the Nasdaq, I think that was probably the most we've had. Oh my, maybe years. We had 671 new highs in the Nasdaq versus 259 new lows. And on the NYSE, we had 524 stocks making new highs, new 52-week highs versus 80 new lows. I mean, these numbers just keep broadening out. Today we had, even globally, the market's expanding here. You had Japan's Nikkei index today crossed above 40,000 for a new high. That thing's running. Even in Europe, you have some indexes pushing new highs, and that's with some of these countries like Germany going into like a small recession. So things are rolling along here, despite what you might think. Today we have crude oil prices moving a little bit higher. They've been up, I think, for 3 weeks, and that is today as part of the OPEC Plus decide to extend their production cuts. So that's going to keep oil prices up there a little bit higher.
Okay, and how is the investor sentiment overall?
And finally, we had last week with investor sentiment. Of course, we still remain overly bullish on that. Part of that is the FOMO rally, which stands for fear of missing out. But you have on the retail investor, according to the American Association of Individual Investors, the bulls outnumber the bears about 2.2 to 1, with retail investors are 46.5% are bullish, and that represents a 17th consecutive week that the bulls have been above their historical average of 37.5%. That's again, that's 17 weeks in a row that they're more bullish than normal. And then we had another uptick in the hedge funds. The National Association of Active Investment Managers exposure index rose to 89%. That's pretty much fully invested, so they're pretty much all in. And then you have something else that we look at, and that's the percentage of bullish or bearish investment advisors. A lot of those guys are magazine writers or article writers, but bulls outnumber the bears on that 3.4 to 1. That's the widest spread we've seen between the bulls and the bears. What was it? 57.6% bulls versus 16.7% bears. That's the widest spread between those two since July of 2021. So, it's just, things are rolling along. The market's almost on cruise control. We are having a little bit of a bump in the road today. The Nasdaq's off about 40 points. Industrials are off about 80. But again, the tech stocks seem to be plowing through all this and moving higher. So, I think at this stage you're probably, just kind of hold on to what you got and keep kind of look at some things. Part of this thing with the Nasdaq, I think today especially, is we're seeing some of the FANG stocks at such a big ride. Like Apple broke below. We're watching that 180 support level on Apple, and once it broke that, I believe it was last Friday, it broke that. The thing's down $5 today, so we're all the way down to 174. That's weighing on the Nasdaq in general and the Dow. And that probably, when you look at the head and shoulders pattern that we have on the Apple, you're probably looking somewhere around 165 on that trade. So we've got a little bit further to go on the downside. Softness in that is also moving over Microsoft and all, but they seem to be coming back. But I think it's mainly just that fact that Apple's down 3% today. It's hugely overweighted in some of the indexes, and that's kind of weighted on the broader market in general today. But I'm sure you'll get people buying the dip as you did. Actually, the Dow is actually down about 150. It's only down 80 right now. So you'll go get investors buying this dip. Everybody's bullish, and that happens. This thing can keep going for a little while. Just want to be careful. We don't want to talk if it's something where we would get like a blow off top or something like that, or where you need to be really careful.
All right. Well, you mentioned that the market could be setting up for a blow off top. Can you explain that in a little more detail for our subscribers?
Yeah, that's a blow off top. It's called several different things. Blow off top is what I usually use. Another one phrase too is a parabolic blow off. Buying climax would be something else. And what happens? Let's go to the charts for a minute.
All right.
And I want you to put in QQQ. And then at the bottom, take the time thing on the bottom and take it over out to at least 2017, something like that. Okay, that's go back to the right a little bit. Okay, that should be good right about there.
Oh,
Okay, now come down on the page. Okay. What happens is these markets or stock even, as they start to they start to keep going up, they're moving up. You often hear technicians and analysts saying you'd like to see the market go up on increasing volume, and that's true. But what happens at times, and let's take a look over here. Let's move your mouse over here, right over here. There's this big long red line around 20. No, go to the left.
oh, to the left here.
Right there, that one. Okay, this is June 2007. As you can see that big drop over there. Now what happens is, okay, now move your line just a little bit to the right. So I'm going to show this. What happens on these things, you have this almost parabolic move going up here. This is a weekly chart at this stage. So you have this thing where you have like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks or so. The market's gone almost on a parabolic move up. And then all of a sudden you have this red bar coming down. And if you look down at the bottom, you'll see this, how the volume spikes going into that at that peak. The market's going along pretty good, the volume. And then all of a sudden you have this big spike in volume. And if you go on to the right again, go back over here to around, let's go to the right, move about, and then right about there. Okay. You'll see these two long, okay, where you're at right now is a good one. and you'll
Okay.
see these big movements in the market, and all of a sudden you'll see the volume looks good. You could draw a small line moving forward, and then all of a sudden you have a big spike in volume. And what happens there is if on the daily chart, what you'll see often on these things is you'll see the stock index make a new high. The volume is through the roof, and then all of a sudden, possibly even that same day, the stock of the index closes down on the day. And what that happens there is kind of it's exhaustion by the bulls. They're trying to, they've been buying all along, and all of a sudden there's nobody left to buy. And then all of a sudden some bears come in, or some analysts come in, or some institutions come in, and they start to dump it. Now all these people that were chasing this stock or index, all of a sudden like, holy smokes, this thing's up 200%, and I just bought it. And this thing's falling out of bed, and they can't wait to get out. And so what happens is usually that's what happens at a top. And as you can see on this chart, the QQQs especially. And now go over to the right again, where you see this over here, the two long bars almost to the edge. There you go. Again, you can see right over there. That's probably November. Yeah, it's November. That's 2017. Okay. Well, anyway, you'll see these things, go up, and then you'll see that volume really spiking higher again, and then as it breaks, then you can see the volume still stays high, but then it starts to fall off as people are trying to get out. But typically, when you see these things, this parabolic move, and then you have this all of a sudden the next day ends up down, or that same day it ends up down and starts having a pretty good move. That usually is a sign that you're probably going into it, at least a little bit of an extended bear market move on the stock. It doesn't have to be into a bear market necessarily, but you're probably setting yourself up for a couple weeks or so where you can at least consolidate, whether it's further downside or possibly maybe some sideways action. But usually it's going to be, if you look at these big tops on this chart all the way through there, after you have this big sell-off, after they spike up and then it comes back down, usually most of these are down, but some of them you have 5 or 6 weeks where you maybe trade sideways a little bit, where it consolidates all those gains. That's especially true if I look here that July 2017, that whole month you went up almost every day, and then you had the further to the right, the next one up. Okay, that one. Okay, there you had that big long gain again, and then you pulled back. But in that case, you went sideways instead of going into, went sideways for what, a good 6, 7, 8 weeks, and then you kind of that consolidated stuff. Then you had a couple of drops before we started to move higher, but that took a while to work off at that stage. But anyway, these are something that you would like to be at least familiar with. They don't happen all the time. But again, the secret here is when you see, everything's going great, like Nvidia could have a sell-off top. The way it trades, it's the volume's picking up. If we see a day where all of a sudden Nvidia goes up, 10% and then ends up down on the day on double the volume, that would be an instance where you probably have a blow off top, and that would be something that you would want to be aware of, and decide, okay, if we're down here on a second day, we may be, it may be time for maybe me to sell some covered calls, maybe put a put in, something like this, because you may have reached the buying exhaustion at that point. So these are something that analysts and traders will look for. A lot of times also when they have that blow off top, you'll see the RSI spike way up, into the almost to 80, something like that. And just be aware of that. I don't see signs that we're heading for that right now, but you do want to be aware that when you have this is a historic run that we're on right now, 16 of 18 weeks or higher. We're up by 25% or so, 30% off, especially on the semis. That's not normal to have moves like that. So just be aware that we with what we're into right now, at some point, if we don't see a slowdown or consolidation, we could find yourself in trouble where everybody just gets too bullish to the point where everybody's already in. There's nobody left to push the market any higher, and you don't want to be left holding the bag up there, because when that happens, the move is usually pretty substantial to the downside.
Okay, well, that is definitely something to keep an eye out for. Thank you for all that great information, David. We're actually close to running out of time for this week, but is there anything else that you would like to add going forward?
Yeah, we just talked about it a little bit. I get a little long-winded occasionally, but if you go up in the upper right-hand corner, up there on the page where it says Manage, go ahead and click that drop down over there. Okay, get Help Center. And then go to Starting Features. The second box there, hit 5 articles, get started. Okay, Classic Chart Formations, the second one down. If you click on that, that'll wrap pretty much what I'm talking about on the blow off top right there in the second paragraph. And it gives you a little bit of example. And also the opposite of a blow off top is a selling climax, where everybody hates the stock. They can't wait to get out of there. And you're nobody wants to put a bid in for the stock, and it just drops completely out of bed. And maybe all of a sudden the volume spikes, the stock's down or index is down 4 or 5%, and you end up for the day. It's just the opposite of what the blow off top is. And that's where the selling climax, you've had the sellers are exhausted. There's nobody left to sell. So generally that's going to be a mark of significant bottom, and then you'll start getting the bulls jumping in there real quick, and also the thing takes off.
All right. Well, that is also definitely something to keep an eye out for. Thank you for pointing out that nice section of the site that we have. I think we can wrap it up for this week, unless there's anything else you'd like to add.
No, I think we're good. I think as far as this week goes, I think maybe because we've had these big gains, you still could see some sideways action. What we're going to look for at the end of the week is the government's jobs report. But at this stage, I think they're looking for 190,000 jobs that have been created, and the unemployment rate to continue at 3.7%. If they come in where they're, like it was January, they were looking for something like 250,000 jobs that came in at 350. If you have something like that, I don't know how much of a sell off you would have, but that would just probably push any type of that would push out when they're talking about having a rate cut even further. They would start talking about the end of June, July, August, September, something like that. And there's a lot of bulls out there are anticipating that rate cuts are going to start possibly still in January or March. There's a few out there, not many. I think it's like 4%. So it's down from about 70% just a few weeks ago. So keep an eye on that. That's the main thing we want to watch this week on economic data, to make sure that we're steady on the jobs growth. That builds in the no landing or soft landing. If you get a big spike in jobless claims or jobless claims come in at hardly anything created, then that would renew the rate cut talks. But for right now, I think you're fine. Under 200,000, there would be the Fed would like to see that. They don't want things getting too hot. They don't want to see it getting too cold either. That would be kind of your Goldilocks number around 200K.
Okay, we'll definitely keep an eye on that 200K. All right, David. Well, thank you so much for all the helpful information. We do have to wrap up this week's Tech Talk Tuesday. Thank you to all of our listeners for listening in. And if you are new, we actually would like to take a moment to welcome you to our show and to MarketEdge. And for now, we will catch you guys all next week.